the Trading Market Technicals Morning Call video for Thursday, March the 14th. Well, we did get a small upside grind yet again. However, the markets have been really sidelined for the last 4 or 5 days. And although the Dow is up its ninth straight winning streak, it is the entire market in itself is a little bit long in the tooth. However, that is not a sell signal to get short the market. Real briefly, just quickly on the numbers here: Dow up 5, S&P up 2, the dollar up 34 cents, Nasdaq up 222, and gold down $4.88, and that's partly due to strong retail sales. We did get a good little bounce, and then right on the opening, we had a hard sell-off of like good 3 5-minute candles, and then the market actually recovered and then grinded higher all day. And that seems to be the theme since the beginning of January. Slow grind up, a couple of days down, sideways consolidation, one move up, another 4, 5, 6 days consolidation for another break higher. And we're at the resistance area of 1555, guys. You got to realize that. Can we go higher? Absolutely. It's 25 or so S&P points. They could do that in a day. So I would not put anything past this market. I would not be looking to pick a top. If you're looking for a day trade to fade something, that's one thing, but you have to have tight stops because this market is absolutely out of control. With algorithms just continuing to probe higher, the market higher and higher, and the market continues to get stretched, and nobody seems to care. And that's all well and good, but manage your trades accordingly to your risk and money management plan. Very important here, especially now when we're at these lofty levels where volatility is at extreme lows, complacency at extreme highs. You have to wonder and say to yourself, I'm not looking to start building long positions here at these levels. It would not be prudent. Take a step back, let the markets digest, let the markets eventually correct itself, and look for just really day trades. And that's what I've been doing, looking for day trades. I have been relatively extremely quiet the month of March so far, and it is what it is, and I'm just going to look for quality trades. If I can do 1 or 2 trades and keep my losses at a dull minimum, the winnings should actually outweigh what the losses are. Okay, what am I expecting? Well, we did a Max Pain video, and it looks like the Max Pain video is going to be pairing out here. Excuse me, the Max Pain video is going to be it's going to take shape and start to play out. We did say that slightly lower to flat would be the most endured max pain for the put buyers, and that's exactly what's really happening here. We are going nowhere. We are just sitting here, and even if the market did sell off, it'd have to sell off significantly for the put buyers to really be in the money. And that's not going to happen. It's just not going to happen this week. Today's already Thursday, Friday. I do see the markets continue to grind higher and maybe even test the 1575. Who knows? The bottom line is be prudent and be alert and be aware of your surroundings and exactly what your asset classes are, what you're looking to trade. Just take a step back. If you're not comfortable, cash is always a position. So I want to just dive into these charts here, guys. Really nothing has changed. We are still at these overbought levels, and we do have a little bit of divergence, some of the indicators, but divergence has not been playing out. So that's why we always need a trigger. Once we see market divergence or we get divergence on one of the indicators, we need now price to follow through to the downside, which has not been doing so. So anyway, let's go right to the economic board. We have initial claims, continuing claims, and then we have here PPI and core PPI. This is a market mover as well. So 8:30, this is going to be a good indication of what the market's going to do for the day. Okay, and then we have, of course, current account balances and then natural gas inventories at 10:30. So let's take a look at what's happening here around us. Let's take a look at copper. Copper really can't get a push higher. A lot of the metals actually sold off yesterday, so it looks like the GDX or the gold could be a one-day wonder. Let's see, but I did mention the bullish percent gold miners index did not cross yet. When that crosses and then you get a little follow-through, that's a little bit more of a telltale sign that we are actually moving higher, but we did not get that, so it could just be a small corrective bounce for the day, but we'll get into that in a moment. But we have the copper not really following through here. Again, a red flag, nothing really to get crazy about, but for the bulls, you'd want to be concerned that copper's not going with with equities. So the copper is actually diverging away from equities. Okay, bullish percent. At these lofty levels, again, overbought, extremely overbought here. But this is until the bullish percent crosses over the 8-day moving average. This is still on the buy signal no matter what. Let's take a look at the SPX 50. As you can see here, price is making new highs. Stocks above the 50-day moving average is making new lows. That is a nice divergence, but again, we need to see price break lower. And again, I don't see that really happening. And even if the market sold off for a day or two between today and tomorrow, I don't see really much volatility taking shape until the next week or so. After options expiration is over, then when the expiration cycle is over and we get closer to the end of the month, I do see us picking up a little bit of volatility. Maybe we get a brief pullback, but other than that, until there's a catalyst, this market will continue to grind higher and test the 1575 area. And everybody is bullish stocks, and that's a big warning sign as well. Everybody is bullish stocks. With no volume confirming this move higher, one has to be cautious. Okay, let's take a look at the SPX over the 200. Again, lofty levels here, overbought, but again, not a sell signal as of yet. We need price to start rolling down and start taking pivotal support areas out. Okay, let's take a look at the VIX. And again, the VIX is going to be a trade here. Not yet. I'd like to see VIX really spike lower with one of these really big engulfing red candles. Let it get outside the Bollinger Band and then close in the next day. That'll be our volatility trade. That's going to be our VIX trade. But until that happens, there's going to be no trade. I'm not going to really take a trade here because we could just slow grind higher, and these derivatives will really eat up your premiums and your on your options. So right now, I want to see the VIX spike lower, get back inside the band, and then we look for a trade as far as the VIX is concerned. Take a look at the dollar. Dollar's really interesting here. So I had a couple of calls yesterday. Mark, why is the dollar rallying when the market's rallying? Shouldn't that be inversely correlated? Yes, it is. Usually it is inversely correlated. That doesn't mean it has to happen every single day. Now, the other truth to it is that if you have a good market and a recovering economy, which the market is pricing in, that the economy is recovering, and it is recovering at a slower pace, but you have other market participants that are abroad and outside of the U.S. that may have money that they want to put in the U.S. and they have to buy dollars to buy our real estate here. They have to buy our dollars to buy stocks. So I could see this actually shifting to risk on dollar rally instead of. So that is why you're having the dollar, I think, rallying yesterday. And again, it's only one day. We usually do diverge away from it, but we'll see what happens in the coming sessions. It's going to be interesting to see if the dollar starts to change its relationship to the equity market. So it's very interesting to see what's going to happen here. Again, one day doesn't make a trend. As of right now, we're still inversely correlated to what the S&P does. However, that may change, and that may change rather quickly, depending on, we have this risk on, risk off type mentality. So we'll see. We'll see going forward. But that's really what the case is. We do have the dollar move. And again, one day doesn't make a trend, but I'll be interested to see how this plays out in the next coming days. Let's take a look at the CBOE. Back down here again. We've been having these extreme up and down. So volatility is picking up, but again, nobody is worried that the market's going to sell off. Nobody. And that's what makes me worried. EEM, take a look at the emerging markets. Again, another big follow-through to the downside yesterday. So, again, the emerging markets is diverging away from our U.S. equity. So it looks like we're the one-hit wonder here out of everyone else. We're really holding true and holding the line up and continuing to manage to go higher. And I'm going to show you some of these charts now, guys, and it's amazing to see. It really is. In 25 years of me doing this, it's amazing to see the last year or so, how these markets continue just to grind higher on absolutely no volume and no fear. That's really amazing. So take a look at gold real quick. Speaking of fear, gold is actually getting away from its oversold state. Gold did sell off here. I could just show you this real briefly. We did get that one fail of the 20. So we'll see what happens here. Again, for a trade, it's a buy for a trade if you're looking for a trade for the day, but I wouldn't be looking to build a position as of yet until I see the ratio start to break upside and the bullish percent index start to break the GDX. And this is it right here. As you can see, Let me blow this up for everybody. Our GDX GLD ratio needs to break higher, which actually turned lower. Okay, and up in here, if you take a look at the bullish percent, this needs to break higher here, guys. Now we're at 5. Really can't get any lower than that on point and figure charts. This is what resembles. But if you break higher, this is where we need to break now. Now I mentioned here we had an inverted head and shoulders that we were trying to work, and I'm going to show that to you right here in our GDX daily. Now we really can't break any much lower than this. I mean, if we start to break 3630 and we start to, then it'll just be basically a double bottom here, and that double bottom might hold. Again, this is my analogy. This is just hindsight, just thinking about what may happen. So we did kind of get up a little bit. Now we need to hold this area at 3630, and it looks really, doesn't look good, to be quite honest with you. Big bearish engulfing red candle yesterday. So we need to take back at least 50% of that candle today in order to have this negate this red candle. Other than that, I think gold may even start to sell off again if it doesn't retain and hold this 3630. Okay, USO, same thing with oil. We have a nice little flag pattern here. This is actually just a bear flag. It looks like right now, kind of shaping up. If you can see here, just bring this line back down here, and this is a daily chart, guys. So if this breaks this lower trend line, we could see actually lower prices in oil, and that would actually fuel the transportation sector, which would fuel equities and risk on. So that means that we could go higher. So we've got to take a look at what crude oil is doing here. Pay attention to that, because that actually could fuel a rally in transports, which would fuel a rally in equities, and that would be a risk on sentiment. Okay, take a look at the spiders, and here is what I'm thinking, and what it looks like here. It looks like there may be higher prices here, guys, and I hate to say this, and I know it sounds like a dead recording, and it's for us traders during the day. It is so quiet out there. If you can't find volatility or a stock that runs past your screens, you're doing nothing. You're literally doing nothing. And if you see here, and I do think that's obvious, that's going to change. Just can't stay that way forever. But we've consolidated for the last 3, 4, 5 days, and I think that transports have broken out of this range. So this may be a good sign that we're moving higher. So we need to see what happens today and tomorrow. If we break out of it, then we need to hold. Otherwise, we just come back in again. But as you can see here, you'll see my theme today. Everything is in the range, and it may be looking to break out. And here are the numbers again. Like I said, these are key pivotal support areas that we need to start breaking to really start getting lower. And really, the first one's going to be S1 at 155.22. That's really going to be our next little area here. Nice little support area from resistance to support. So S155. Call it 155.30. Call it S1 for now. That's going to really need to start breaking, and then we're going to see some more downside targets. But we have heavy support on the way up. Heavy support. Again, we are a little bit overbought, but again, overbought is not a sell signal. Take a look at our SPY30. This is what we're dealing with intraday for the intraday traders. Look at this. Terrible. 5-6 days of literally just up and down, low price volume, no volatility. So picking and choosing to be selective is really, really critical in this low volatility environment right now, guys. But we have our Bollinger Bands pinching, and they continue to pinch here. That means that there is a lot of energy, pent-up energy here in this market. My guess is that we're going to explode to the upside at least one more time. That's what it looks like, at least on the charts. 1555 S&P cash. As you can see here, here's the theme. Sideways consolidation. CCI moving back to the 100 area, and every time you saw price starts to move sideways, it unwinds its overbought reading. So remember that. So this is actually a bullish price action. Believe it or not, although we haven't gone anywhere, this is bullish. I would not be looking to short this market here. I'm just showing you the S&P 60-minute chart, as you can see. Just literally right now, if and when we do pull back, I'm looking anywhere between 38 to 61.8% retracement, and then we would reevaluate to see what kind of volume steps in on the downside. And here, this is the key, guys. Transportation sector, big move up. I mean, literally gapped up and never saw the low of the day. So this here tells me if the transports are the leaders, looks like we're going higher. Now, if the transports roll over today for some reason, that's another story. But right now, it's telling me that the markets are continually going to move higher. IWMs, 3-4 day consolidation. As you can see here, we're extremely overbought. Volume here is not confirming what price is doing, although price is what pays us. So pay attention, because if the IWM start to break out, everything else is going to follow suit. And if the transports did it, doesn't mean that the other followers will follow. They will follow. So here we have the same thing. Another 9 days up in the Dow. 9 days. Nobody is worried. That's what worries me. I keep saying that, but that's what worries me. XLF, same thing, flat top here. We have a 4 or 5 day consolidation at the upper end of this bearish rising wedge. So we'll see what happens. Right now, these are not sell signals. Apple, talk quickly about Apple, and then we'll wrap this video up. Apple's in a big hurt of pain right now. Apple, I would not be looking to be trading. I would not be looking to build a long position as of yet. Again, I keep stressing day trades, but Apple's not telling me anything that I want to start looking to build a position. A break below 420 will get 400 and then easily get down to the 350. But Apple needs to do something here, and it looks like Apple is not looking to do anything at this time. So markets really don't care. Apple is right now sitting on its own, just meandering back and forth between 420 and 440. So we'll see what it does. It'll be interesting to see if Apple can break. If Apple can break above the 20-day moving average, it'll take at least a beeline back up to this upper end of the range, which kind of coincides nicely with the 50-day moving average. So pay attention to it. For a trade, yes. Other than that, I'd stay away for a position. And again, lastly, the cues, as you can see here, the theme seems to be sideways consolidation. Now, the transports did break out, as I showed you. That could be the leader, and that could be the fuel to spark this market for the next leg up to the 1575 in the S&P cash. All right, guys, be safe out there. We'll talk to you tomorrow, and have a great day today.